Sophie Karp is Senior Analyst covering electric utilities, power, and renewable energy for KeyBanc Capital Markets. Sophie, it's good to have you on today. I want to get your reaction to this data we received from the National Energy Assistance Association showing that 20 million Americans are at risk of seeing their power shut off across the nation. And of that, 3 million are anticipated to see their power shut off by the end of this year.
Thank you for having me. Yeah, I mean, it is definitely a concern, right? And this is particularly a concern for utilities who just emerged from the moratorium on disconnects due to COVID and are already sitting on a large number of deferrals. You know, historically, I think that utilities and their regulators tend to work these things out. Utility companies always offer some sort of payment plan or form of assistance to their customers and try to avoid the disconnects, particularly in vulnerable communities. And we expect that this will be the case this time around as well, right? And with respect to the utility bills, you're correct that we see these headlines about super high utility bills in particular regions, but really in a lot of regions, these increases are a lot more moderate, and we've even seen some regions of the country where utility rates are slightly down year over year per DOE data. So I think that those impacts would be largely concentrated in the lower affordability states. So how would that?
Just on that specific note, if there are more shutoffs in the coming months, which utilities specifically do you think are most at risk, most vulnerable?
So I think to your point, right, this is the lower affordability states, right? So you would be looking at places like California, for example, or New York State, or the Northeast, Massachusetts. So the utilities that operate in those states, that would be EIX, Sempra, as they exposed to Southern California, could be one of them. Eversource, Con-Edison in New York, Avangrid also in New York. So those would be the utilities exposed to those lower affordability regions, right? That could potentially see some impact from that. On the other hand, on the other end of the spectrum, you see high affordability regions where rates are more stable or maybe even going down. And those are middle of the country. You're looking at Colorado, you're looking at Wyoming, Montana, places like that. And the utilities exposed to those types of regions that we highlight in our research are, for example, Xcel Energy and Wisconsin Energy, right? And so I think those names are the ones where you want to be at this point in time, where rates of affordability and commodity price and inflation is really becoming a concern with respect to utility rates.
So let's talk about the individual level here in the homeowner or the renter who has to pay utilities this winter. You've seen gas prices go from $3 per million BTU to I think it's $8 or thereabouts per million BTU. How can those costs not be passed on to consumers and cause them to pay potentially much, much higher bills and then potentially result in more defaults or deferrals on payment?
Right. So there's two sides of it, right? Electric and the heating bill, right? So with respect to heating bill, but electric to some degree as well. Some of the utilities that we cover, they have storage, right? So they tend to fill that storage during the period of lower pricing. And so they do not buy in the spot market. They do not pass it on to the consumer on a one-to-one basis, right? And so Wisconsin Energy, for example, has significant amount of gas storage that they can utilize for that and help mitigate those increases.
I see.
Like over time, so over time, if this situation persists, of course you will see that passed on to consumers, right? But again, that situation will be different because different gas hubs in the country are priced differently. It's not just Henry Hub, right? Some differentials are much higher. So the gas in the Northeast are going to be at a premium to the gas in some other regions of the country. And the Pacific Northwest, for example, can tap into cheaper Canadian gas. And some of the customers in those regions may actually benefit from it, right? So it really does not, it's going to be the impacts are going to be very regional, and you really have to concentrate. Investors have a chance to differentiate between low affordability states with high usage as well, right, versus high affordability states where usage is going to be seasonally maybe not as impactful as we go into the winter.
Okay, Sophie, thank you. A lot to digest there. Appreciate it. Sophie Karp of KeyBanc. And Tyler.
Shepard Smith here. Thanks for watching CNBC on YouTube.